Welcome back to the second hour of the Big Money Show. I'm Brian Brenberg, along with my elegant co-hosts. And with us for the hour, I think he goes in the elegant category, entrepreneur and host of The Fixer, Marcus Lemonis. Good to see you, sir.
Good to see you.
Well, President Trump turning his focus to affordability. The White House says Republican policies are working, and the proof is in the numbers.
We have slowed inflation, and we are working very hard to bring it down. Kristen, I can tell you that the Council on Economic Advisors has a study. You know the best way to bring your inflation rate down? Move from a blue state to a red state. Blue state inflation is 0.5% higher, and that is because they don't deregulate, they keep prices up, energy is higher.
The secretary adding that he's very optimistic for next year, saying the administration has set the table for a strong growth economy with no risk of recession. All right, Marcus, you always love a good debate. The secretary is laying out a strong story for 2026. Are you feeling it?
Well, the likelihood of a recession is lower, not gone completely. Food prices are higher, housing prices are higher, energy's lower. So when he talks about blue state, red state, I'd have to imagine that the blue state prices of gas in California are skewing that a little bit. But food and housing, the two most important things, are higher.
Jackie, what do you think?
Crude oil was back below 60 today, which I thought was pretty significant. And you are seeing those gas prices translate. So this comes to me back to sort of a tale of two stories for the president, the things that he's been able to work on and the things that he hasn't necessarily been able to tackle. And the reason I bring that up is because that's your baseline. Then you get to this blue state conundrum, I'll call it, and all of the extra, red tape that they add to things to make it more expensive. The problem is, I think most people would live in a place that was friendlier to their pocketbook. Just not everybody necessarily can for a lot of different reasons. So many people are stuck in states where they don't necessarily want to be, and they've got to, pay for stuff that they don't agree with.
Right.
I wish we could get to a better place with that, but I don't see that changing anytime soon. I think it's just going to become more and more frustrating as all of this becomes more and more polarized. And then I think you're going to see people get to the point where they start to say, okay, well, I thought I couldn't leave, but I've really got to think out of the box about my life, my situation, my job potentially, what I'm doing here, because it's going to become, if you took Mamdani's vision and sort of drew it out.
Nationalized it or took it over time?
Just here.
Okay.
Take it out over time. If he got to do all the things that he wanted to do on his wish list, it would become unlivable here.
Do you, that's interesting. And we had the Mamdani-Trump meeting in the Oval Office. Dagan, I wonder do you think the president's pulling Mamdani, is going to pull Mamdani his way? Or to kind of go to what Jackie's saying, do you feel like Mamdani's success is kind of threatening to pull President Trump his direction just a little bit?
Neither one of them are going anywhere. They're stuck. President Trump likes winners, and the guy won.
Yep.
And he mentioned it in the Oval Office last Friday. He's like, I was watching your numbers in the run-up, in the primary, where you were like, oh, single digits, and then he's come.
He went right through the numbers,
He was paying attention to the guy because he came out of nowhere, and he's now the mayor of New York City. Now he's got to govern. And President Trump will be the first to lambaste the guy when he starts sucking wind. And if he sticks to these policies, he didn't go deep blue, he went red like communist. Not President Trump, but Mamdani. So if he starts sucking wind, President Trump will be with the biggest microphone in the nation, will be the first person to lambaste him. I understand, and Jason Chaffetz mentioned this last week, that because I was doing the numbers, and consumer prices were up roughly 21% under Joe Biden over 4 years. They're up 1.6% so far under President Trump. But the administration needs to be careful crowing about things that do not resonate with people who are upset about prices. And press secretary talking about the lowest gas prices in years over Thanksgiving. Well, they're looking at Thanksgiving gas prices.
That's right.
But gas prices are up from a year ago. The national average for a gallon of regular unleaded right now is $3 and almost 7 cents a gallon. 1 year ago, it was $3.05. So if you keep saying, don't say things that aren't true. People know that. If you're filling up, you know if gas is down a lot. So they ought to be just. You can talk about how awesome the economy is and talk about what you're doing, what they're doing with AI investment will raise people's wages, it will improve productivity, but you don't have to fib about gasoline prices because everybody is filling up their cars and they know if it's down a lot.
It was about this level last year Thanksgiving. The year before, I think it was at 327 or something, and the year before was at 380. So it's down relative to 2021, 2022.
Right, but it's up. We're up from a year ago.
Yeah, exactly. So Taylor, all right, they're focused on inflation. 2026 looks good. Are they getting out ahead of their skis in terms of promising the moon next year? And here's why I asked. Let me tell you why I asked. Because I think people had huge expectations for the Trump administration coming into this year. This was supposed to be the year prices came down, our wallets felt it. This was going to be a big year. Now we're hearing just wait till next year. Is it a problem to start promising too much about next year?
I'm going to invoke the positivity of Larry Kudlow. Profits are crushing it, which is helping boost the stock market. And we could say the stock market's not the economy, and I understand that. But when profits do well, that means you could get a dividend check if you own ExxonMobil. They could do a share buyback, which helps boost your pension if you own a stock. Or ding, 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 they could use higher profits to hire people to help spur the economy, right? If we think that earnings are forward-looking, I come and bring you this statistic. Earnings last quarter, nearly every sector saw upwards earnings revisions, raising guidance because things are looking better. Typically, correct me if I'm wrong, 6 months in advance or so. You could say the market price is in that early. More than 80% of companies beat. No one cares because they set low expectations to beat. But it did trigger a elevated surprise of upgrades to 13% earnings growth year over year versus an estimated 8% earnings growth year over year. Every sector goes to the upside. Fundamental strength, this is a quote, is set to continue. Yes, we are looking at a K-shaped economy, and while consumer sentiment remains downbeat, elevated consumer net worth is still supporting consumption. The stimulative Big Beautiful Bill law also expected to spur GDP growth next year by 0.3%. So I am optimistic that companies are seeing this, and if they're looking at that in the future, that spurs growth, they hire, and then the capitalism boom can continue.
So how come the hiring's not happening? Like, I get the earnings growth thing, that more cash to deploy. The hiring thing's really not, I mean, if you look at the data we have, it's not happening.
Higher profits are never more important than higher prices, and higher prices is what we're dealing with now. And if you look at the profit results of most companies in the last 8 to 12 months that they've reported, they're also having a much more tempered approach about 26 and what's going to happen in 26. So when we look at the forward-looking 12 months, I can see people being very concerned about prices and very concerned about profits as well.
When you think about prices, though, and I agree, I just want to build on what you've said, is that labor and wage costs are probably the biggest component right now. Those never really came down. We've seen 1% wage growth, which is good for people. It's good for consumers. It keeps up with inflation. But remember that once you take those wages up and set a new standard for the bar, there's only so much that prices are going to be able to come down. And if these employers have to hire people and pay these wages or potentially more, they're going to think twice about doing it, or, you know, unique ways of doing it, like going into the holiday season, you hire seasonal employees and then you let them go when you don't need them anymore. That is my biggest worry for the labor market, and why I thought it was so dangerous when the Democrats under Biden were like, we've got to get the minimum wage up. We've got to get it up. They couldn't get it up through Congress. Then they spent and inflation took it up and they were like, oh, finally, we're where we want to be. But this isn't about, trying to harm the American worker. It's about keeping the whole equation stable.
You mentioned prices. Looking at like Verizon, for example, they're laying off 13,000 employees. And in the release, they said that they're cutting the workforce, 13,000 employees across the organization, and also reducing their outsourced and other outside labor expenses.
Yeah.
This is an expense issue.
And you did this at a time, Democrats, when AI is coming into play, and you can cut your labor force. You can trim your labor force because there's something there to back it up for people.
I think what it means is 2026, we're going to have to get a heck of a lot of that blockbuster growth that Kevin Hassett promised. We will follow it. We shall see.
There's nothing that's going to drive it. Sorry.
Well,
So Marcus says no.
the big picture is, if not for AI investment, we would be in a recession. And right now, it looks like these AI investors who are building out these data centers are stretching and now borrowing aggressively rather than just using cash flow to make these investments. So if the market stops rallying tomorrow and starts selling off, that's why.
It's rallying right now.
Yep.
We'll see what happens tomorrow.